Hi everyone, and welcome back to the channel. It looks like inflation is finally starting to subside. In June, we had inflation as high as 9.1%, and we're now seeing 7.7% for October. So, what's going on? Why did the market rally like crazy yesterday? Where do we see inflation going? Are things getting cheaper? And what's going to happen in the future with the Fed? Well, let's get into it. So, why did the market go up so high yesterday? Well, it's because we beat the Wall Street consensus on what the inflation report was going to be. Most economists were saying around 8%, and we got 7.7. That's a beat, and yeah, that's great. We should be celebrating. But I don't think we have as big of a celebration as Wall Street did yesterday. We really only beat it by a little bit, and I think it's a huge overreaction. But right now, investors are looking for anything they can use to get stock prices back up. They're looking for a win. They're looking for this great support from this economic data that really isn't there. They want the Fed to pivot, and they're hoping this inflation number gives the Fed the opportunity to pivot, but I don't think that's going to be the case. We'll see what comes out later, but I'm expecting them to continue with 0.75% or maybe 0.5%, depending on what other data we see later this month. So why is it so important that inflation is getting better? Well, it's been hurting everyday Americans for about the last 18 months. It's been a huge thing for all of us to endure and to try and get over. We're finally starting to get on the right side of things, but I truly don't think we're out of the woods yet. Another incredibly important point to look at is core inflation numbers. Well, what was that? In September, we had 6.6%, and now we're down to 6.3%. We're finally, again, getting on the right side of things. This is all due to the Fed using its tightening monetary policy to really try to tighten up the economy and slow things down. Make sure you leave a comment below if you think the Fed's policy is actually working and helping inflation. Something important to remember, though, is that prices are not coming down. That would be negative inflation. We're not seeing that. We're just seeing prices go up a little bit slower than they previously were. So remember that whenever you go to the grocery store, look at energy prices or anything else. Prices aren't going to come down right now. We're not in a recession. People aren't looking to do that. But they are starting to slow down on their pace of upward trend. So hopefully that helps. One place we have seen instant results from the CPI report are mortgage rates. They went down 0.55% yesterday. Now, that's the first time they've been below 7% in really months. And this is just one place you can see instant gratification from the CPI report. Treasuries are down, which allows the mortgage rates to really decrease and give lenders an opportunity to give better rates. This allows families to have more cash flow if they're trying to get into a house and can even buy a better home because their payments will be lower. So that's something huge we've gotten from the CPI report. Now, I want to change gear a minute and talk about wages because that's a place I feel a lot of Americans are still going to get hurt. Yes, inflation is coming down. It's at 7.7%. It's getting a little bit better. Do not let your employer tell you that a 2% adjustment in your wage is going to fix everything and make it better for you because it's not. Inflation's still very high. Things are going to continue to cost more month over month. So make sure you're pushing back if your employer tries to do that to you. We don't want you to lose buying power, and we want you to keep living the quality of life that you're used to. One thing to note on this is that employers are going to start getting more power and employees are losing negotiation power. And that's because people are starting to lay employees off. That's huge. Meta let 11,000 employees off. Microsoft has let off 1,000 employees, and this is just the start. So make sure you're careful with your decisions and make sure you're having your emergency fund ready to go in case something like this happens to you. Previously in this video, we talked about mortgage rates and how they got better from the CPI report, and that's great. Two areas that did get better, but I don't think we're going to see continuous improvement in, are grocery prices and energy prices. Let's talk about the energy prices. Energy went up 17.6% year over year. That's not good. And you can watch my video here on why prices at the pump are going to go back up, but in reality, this is just a short version of this. So the US was subsidizing oil. They're not any longer, and OPEC Plus is upset about it. So they're going to raise the price of oil because they control most of the oil supply. Supply and demand won't be in balance, and they'll make out the richer of it. So we'll see what happens there, but I don't think it's going to be good for us. Second, grocery prices are not doing well. They're up 10.4%, and I don't think this is going to get any better either. The Federal Reserve really can't have much influence on what the prices of groceries go for, so we'll see what happens, but people are going to keep buying groceries. They can't just stop buying them for their families. That's something you have to provide. And yes, people went from the name brand to, the generic brand. But you can only do that once. You can only go down to the generic brand. There's nothing below that. You can't keep going cheaper and cheaper on groceries because they just have a base price and they're expensive. So I don't think this is going to get better, and I really don't know what the US is going to do about this, but just budget for it and be prepared that grocery prices are not going to get any better. Finally, we're not out of the woods yet. Inflation is still very high. The Fed is still working on using their economic tightening policy. They're going to raise rates and they're going to take money out of the money supply. Remember, the Fed doesn't do things proactively. They're always reacting. They're looking at the CPI data, job reports, which are all from previous months. Even GDP, previous months. We get this data really, really late. So don't necessarily listen to them for every single thing that's going to happen. They don't know that much more than you and I know. They're looking at old data. What I can tell you is that if you stay right here on this channel, I'll give you up-to-date information. I'll keep you guys informed on what's happening in the now. That way you can make the best decision based on your life, your financial decision, and what's best for you and your family. So stay here on the channel. Well guys, that's all I have for you today. Thank you so much for your support on this channel. It really means a lot. Make sure you like and subscribe, and go ahead and leave a comment on any video topics you want to hear more about. Otherwise, I'll catch you guys in the next one.